every investor who wanted to be successful in investing in stocks, either for short term or for long term, one of the key ingredient is looking at the stocks both on qualitatively and quantitatively, right? Which means understanding a stock strength with respect to the charts as well as the intrinsic fundamentals about the company, right? So in this discussion, have not been more focusing on technicals, only dependent on fundamentals, or whoever are focusing on fundamentals, right, not at all focusing on technicals, you will understand why it is important to club both of them, right? To club both of them. So let me share my screen and let's understand the fundamentals and technical lens, right? An ideal investor or a super investor is one who can observe the stock both fundamentally and technically, and we will understand what are all the benefits you will be getting out of it, right? So we'll discuss about the fundamental lens, technical way of looking at it, and why, right? If you understand or if you get to know why you need to do this, then you will be focusing more, right? So we'll be covering these three segments more elaborately in this discussion. First, when we look at fundamentals, yes, any company, when we observe qualitatively what are the factors which are impacting, fundamentals will tell you what to buy and how is the valuation of the company, right? Is it like too overvalued company or is it like a too undervalued company? And how do you get to know that? If you see the industry standard, the industry price to earning, right? And if the specific stock is much beyond the industry PE, it will be like an overvalued stock. And here is the catch. Many investors, sir, the stock is trading at a PE of 60. The stock is trading at a PE of 70. I think it's like too overvalued stock. I'll be looking at a lower PE levels. Please understand, even though a stock is trading at a very high price to earnings, if there is growth coming forward in the next couple of years and there is a lot of earnings increases there, even at a higher PE, it makes complete sense to invest. So the point which I'm driving you home is just based on price to earning, you should not have your final decision, right? You need to further look, even though the stock's PE is good, is it like more premium company or is it a company wherein the earnings are more or the future earning projection is good? So those companies will definitely demand a higher PE and we should be there, right? And even during a bull market or when the market is in a euphoria or the market is picking up strength, most of the companies will be having a higher PE. A lower PE companies will be like a junk companies also, where you think that yes, I'm entering into an undervalued company, but the chances are high that you are being in a trap, right? Being in a trap. And second, why you need to learn technicals and how it will help you for the fundamental investors. Let's learn. First of all, yes, apart from the fundamental way of looking at companies, technicals or charts reading, right? On trading view, you look at the price and volume, right? Whenever we discuss about technicals or charts reading, the first thing you need to remember is price and the volume, right? And this combination PV, all the indicators, all the strategies, right? All the processes are derived out of price and volume, right? Out of price and volume. So yes, technicals will help you to filter down the stocks more. Which stocks are trending, right? Which companies are in an advancing phase. It will be filtering out. And stock exits. Always remember this golden rule. When you're entering into a stock, yes, you can focus on fundamentals plus technicals. Qualitatively, how is the company? Technically also, is the price and volume picking up strength? But for exit, first comes technicals, then fundamentals. Because volume is something no one can hide. If you see a company wherein it is declining, right? right? Yes, the stock is losing strength. It is falling for the last 3-4 days or last 2-3 weeks. And apart from that, the volumes are also high. Means red bars below the chart is high. Means lot of sellers are exiting. There are a lot of sellers, or there are a lot of institutions who are exiting. So technicals gives you the early decision for stock exit. Fundamentals may follow later. The news may come later that the CEO has resigned. There was some fraud. The quarterly reporting of the data has been wrong, right? So fundamental news follows later. Technicals comes first. And stage analysis. What do you mean by stage analysis? Every company has a life cycle, right? This is the entire life cycle of a company, right? This is your stage 1, the early stage, right? Your stage 2, which is your advancing or growth stage. Stage 3, a consolidation or a flat stage. And stage 4 is your decline stage or a bearish stage. This is the stage where we exit, and this is the stage where we will love to add stocks which are in this trending zone, right? So this analysis, you will be able to get it by understanding technicals. So apart from the fundamentals growth of a company, a person who's just investing based on fundamentals, if he learns technicals, these are all the factors which he can add into his investing journey. And now comes to technicals, right? A person who is only focusing on technical knowledge, he will be able to observe when to buy and when to exit. Yes, there is a company wherein after a long consolidation, or it is flat for a very long period, and a strong price and a volume is coming, means more number of buyers or institutions are adding. That is a trigger to enter, right? You should not time the market, but you can time the stocks. Entry and exit into stocks you can time. So this knowledge on technicals will tell you when to buy and when to exit. Yes, you can check the relative strength. As we move forward in our further discussions also, we'll be discussing about how to analyze the strength, right? The wonderful part in technicals is you can compare one company relatively to other company. You can compare one company relative to the overall market index, right? Overall market index. So based on that, it will tell you whether it is a stronger or whether it is a weak company, right? A weak company. By choosing stocks which are performing better than the benchmark or better than the Nifty 50, these are the stocks which are in an uptrend, and these will be the next multi-baggers. Yeah, multi-baggers. And apart from that, stage analysis, which I told you, stage 1, stage 2, stage 3, and stage 4. So these stages will be able to plot, and we'll be able to take a decisive action whether to be there or not. If a stock is continuously losing and it is slowly entering into stage 4, that is an early signal to move out of it as early as possible, right? Whoever are like fundamental investors, sir, I'll be investing into a stock and I'll hold it for years together, irrespective of the market movement or irrespective of the stock movement. Gone are the days wherein we leave a stock forever, right? Because even a very high quality company, if it is losing on the price and volume, we should have our exit criteria, right? You should be looking at the chart either on a weekly or a monthly or on a daily time frame to assess whether we can hold it for long or not, right? And yes, one of the most important factor is you'll be analyzing the price and volume. Just imagine a company can fudge its quarterly data. A company can influence the auditor and can change some data. A company can come out with a false declaration of numbers, revenue, profit growth. They can fudge it, right? Of course, later on the regulatories will come to know, and that's a separate issue. But volume is something no one can fudge. on the charts or on the technical analysis, when you see on a chart, whatever are the volumes coming, no one can fudge that. And it's the realistic data which will help you to take decisions. And a stock which is continuously coming up in volume is a clear indication that institutions are entering. And I would love to be in those companies where there are big institutions are there, because to go a long journey, sit on the shoulders of a giant, right? Sit on the shoulders of a giant. So when institutions are betting more on a specific company and more volume is coming, your journey will be more smooth, right? Your journey will be more smooth. And yes, trend analysis, you'll be able to know whether it is an upward trend or a downward trend in a company, right? In a company. So all the technical investors, these are the advantages which will help you to assess when to buy and when to exit. Now, for all of you, apart from learning on the technicals, fundamentals, if you are able to track the company, yes, if you see Varun Beverages Limited, yes, for the last couple of weeks, months, it is continuously building up price and volume strength. If parallelly you look at the quarterly data, what is happening in the quarterly numbers? Is the sales increasing? Is the profit increasing? Is the earnings per share increasing in a stock? That will give you more conviction. Please remember, sir, I wanted to analyze a wonderful company and I wanted to make it big. It will not come because of someone telling you. It is about your own conviction to increase position. Means if you believe that yes, this is a great stock, multi-bagger stock, I need to add more, that is where you create wealth. And in order to build that self-conviction, apart from technicals, if you understand little bit on fundamentals, data tracking for quarterly, that is where you get more conviction and you will add more position. Even if someone says this is a good stock, that confidence will not come to you to invest in a heavy investments, right? Second, fundamentals will help you to understand the business details more. And what I would say, any annual report or a quarterly report or any latest con call report, or even any research recommendation report, be it like ICICI Direct, Axis, SBI, any MF, any DMAT service, if they are giving any recommendation reports, I would not advise you to look at the recommended price or the target price. I would not advise you to look at buy or sell call, but I would ask you to study about the company. Just do a control F. Sir, I cannot read the entire report. Just search for, are the margins increasing, right? Is the growth in the business happening or not? You just search for capital infusion. Okay, X Limited, Aarti Industries, yes, it is expanding and it is infusing, let's say, a 2000 crores into a new project. So on a longer term, this will give more results for the company, right? You can get those details by analyzing fundamentally, right? And in order to ensure you have some good stocks in your overall portfolio, right? A fundamentally strong company during a market downfall, you should be investing into that if it is exhibiting strength. Let's say overall market has declined, right? Market is falling continuously, but there are some high quality companies, right? So Polycab India, your Cholamandalam Finance, right? Your VBL, your ICICI, your HDFC, your ITC Limited, right? Some of the companies which are consistently giving good returns, or returns in the terms of its revenue, profit growth. It's a qualitative company and market is falling continuously. But these companies are able to hold its strength. These are the positions where you invest into it or you add your position during market fall. But many members, what they do during the market fall, they add into companies which are also falling down, considering that yes, I'm getting at a very good price. Rather, invest into the strong companies where they are exhibiting strength, which means they are not falling aggressively with respect to the overall market. If market is falling by 2%, 3%, these stocks will be flat or will just correct by 0.5 or 1% max. Means even in a market weakness, they are exhibiting strength. So those are the companies you should be investing into. And lastly, your fundamentals will also give you a hint on red flags, which means, yes, sir, I've been analyzing the quarterly data of certain businesses which I'm already invested, but I see the sales has been continuously declining in the last 3 quarters. This is a red flag for you, right? The earnings per share is decreasing, or quarter on quarter, profits of the company or the margins of the company are diminishing, or they are contracting. Means the company is facing some pressure. Even though the technicals, it is building up some good strength, if fundamentally if it is exhibiting some weakness, so that is a red flag. Means not an exit for you, but you will be more cautious. And those red flag companies, technically also they are losing weakness. You just book your profit and get away from that stock, right? So this is the benefit of technical investors understanding on fundamental concepts. Now let's summarize our discussion by having a combined lens. Yes, so if you're able to use the fundamentals along with technical lens together, the first benefit you get is you will be much ahead of many investors, because the fact is there are some insiders, inside trading, and there are big companies or big corporates which will get information much in advance than the retail investors, right? So you will be able to understand what exactly is happening, right? And even let's say a stock, technically if it is falling aggressively, price and volume, which means majority of the institutions are exiting, right? Because if you see some fund managers or some wealth management firms or some institutions, they closely track the company, right? They get to know if something is fishy or if something is not good in the company. Then when they exit, when there is a high volume coming up in terms of red bar sellers, so that is an early signal for us to exit, and that's the advantage by having a combined lens. And the fact is, yes, insiders will get to know information, institutions, even news agencies, right? All these people will get information much in advance than the retail investors, and that's the fact. And any information later on will be coming into quarterly results, con calls, or annual general meeting, right? So if you are just observing on the quarterly data, con call reports, AGMs, or studying the company only on annual reports, fundamentally you miss the earlier part, right? So you get to know the information much later, after the stock has fell down, right? After the stock has fell down. And the fact is, yes, retail investors will be the last to get the information. But if you have a combination of fundamental and technical lens, when you see a stock is declining, a stock is losing strength, price is falling, volumes are coming very high, sellers are more, and it is in a downtrend, or it is in stage 4, a declining stage, this is a signal for us to be more cautious. And for all of you who are like building on fundamentals versus technicals, if you just combine both the hats and the technicals, it's not that you become an expert on day one, you keep learning. And the key factor here is it's important to observe more charts. I would have observed some thousands of charts in my journey, or even lakhs of charts, right? So you have to observe the pattern. How is the price volume? The more charts you analyze, the more information you get about the position of that company, right? So it's all about practice and practice. So let me know below, what are the things which you'll be focusing from now onwards? Is it like fundamentally, sir, I'll be studying more on the quarterly data. Sir, technically, I'll be studying more on the price volume action, right? Let me know below what is that you will be focusing from today onwards. Yeah.